Spot Bitcoin ETFs are now available to trade, but they're not what you think. Let me explain what a Spot Bitcoin ETF actually is, the differences between a Spot Bitcoin ETF and a Futures Bitcoin ETF, how this actually affects the price of Bitcoin, what this means for your favorite crypto stocks such as Coinbase and Mara and Riot, and how this will affect other cryptocurrencies such as Ethereum, as well as how you can actually buy and sell these through your broker. Bitcoin ETFs such as BITO have been trading since 2021. But the Bitcoin ETFs that have been trading since 2021 are very different from the Bitcoin ETFs that were approved recently. See, there's two types of Bitcoin ETFs. There are futures Bitcoin ETFs and there are spot Bitcoin ETFs. A futures Bitcoin ETF means that the ETF or exchange traded fund is trading Bitcoin futures. Futures are essentially a bet on what the future price of Bitcoin will be. And Bitcoin futures do not directly affect the price of Bitcoin, meaning if millions and millions of dollars got pumped into a futures Bitcoin ETF, the price of Bitcoin would not move at all because there are no actual buyers and sellers of Bitcoin when people buy a futures Bitcoin ETF, such as BITO. A spot Bitcoin ETF, on the other hand, trades actual Bitcoin. It is designed to match the actual spot price or real price of Bitcoin. And the only way to really truly know that you're matching the actual price of Bitcoin is to actually buy and sell Bitcoin itself. The way a futures Bitcoin ETF works is when more and more people put money into the futures ETF, the manager of that Bitcoin ETF then has to go buy more and more futures contracts. And when people pull money out of a futures Bitcoin ETF, the manager of the ETF will pull money out of or sell those Bitcoin futures contracts. With a spot Bitcoin ETF, when you put money into a Bitcoin ETF or buy shares of a spot Bitcoin ETF, the manager then has to go out and buy actual Bitcoin. And when you sell shares in a Bitcoin ETF, the manager of that ETF has to go out and sell Bitcoin. Now, this is important because this means that as the manager of the ETF buys Bitcoin, this actually increases the price of Bitcoin because the amount of demand is going up and that increases the price. So the big difference between a Bitcoin futures ETF like we've had since 2021 and a spot Bitcoin ETF, such as the ones that just started trading in 2024, is that a futures Bitcoin ETF, when you buy that ETF, it has no effect on the actual price of Bitcoin. But with a spot Bitcoin ETF, when you buy that ETF, that actually increases the price of Bitcoin because the amount of demand for Bitcoin is going up, which pushes the price up. Now, prior to 2024, the only types of Bitcoin ETFs that were allowed to be traded were futures Bitcoin ETFs. However, on January 10th, 2024, the SEC approved a brand new kind of Bitcoin ETF. On January 10th, 2024, the SEC approved a rule change that paved the way for spot Bitcoin ETFs. The path towards this approval was led with a lot of confusion. On Tuesday, January 9th, 2024, a tweet was made from the official SEC government Twitter account saying that a spot Bitcoin ETF had been approved. However, the SEC then came out and said no, it had not been approved, that their Twitter or X account was actually compromised. Apparently, somebody got access to the SEC's Twitter account, stole the password, and posted this fake tweet saying that a spot Bitcoin ETF had been approved. After the SEC denied that, Bitcoin slid. Bitcoin then trimmed its losses, and Ethereum actually hit its highest level since May of 2022. Then the next day, on Wednesday, January 10th, 2024, the SEC officially approved the rule change that would allow Bitcoin ETFs to start trading. 13 different companies filed to have spot Bitcoin ETFs listed and traded on the stock exchange. Now, just because the SEC approved a rule change that allows spot Bitcoin ETFs does not mean that all 13 spot Bitcoin ETFs would actually start trading. There were two components to the approval of spot Bitcoin ETFs. The first was a 19B-4 filing, which was a form used by exchanges to inform the SEC of a proposed rule change. In this case, a rule change is required under the Securities Exchange Act of 1934 because a spot Bitcoin ETF is a new product, and the exchanges, the New York Stock Exchange, NASDAQ, and Chicago Board of Options Exchange, must provide rules to explain how the product will actually trade. The SEC must approve that rule change before the products can actually trade, and this is the filing that was facing a deadline of January 10th, 2024. That rule change was approved by the SEC on Wednesday, which now allows spot Bitcoin ETFs to start trading. However, each individual spot Bitcoin ETF must then be approved. Step 2 is the approval of the S1 filings. These are filings to register a new security, that is the spot Bitcoin ETF, with the SEC. Now, it was widely anticipated that once the 19B-4 rule change filing was approved, the SEC would separately approve the S1 applications of all of the ETF applicants at once. However, the SEC might have decided to approve some, but not all of the S1s. And that's exactly what happened. The SEC approved 11 of the 13 spot Bitcoin ETFs. Those 11 spot Bitcoin ETFs, which will start trading on Thursday, January 11th, 2024, are listed here on the screen. Now, I do want to point your attention to the second to bottom one, which is the Grayscale Bitcoin Trust, GBTC. GBTC has been trading for a few years now, but up until Wednesday, it was a futures Bitcoin ETF. Starting Thursday, it will be converted into a spot Bitcoin ETF. And all 11 of the spot Bitcoin ETFs will start trading on Thursday, January 11th, 2024. Now, there are a lot of differences between these 11 spot Bitcoin ETFs, so if you want to start buying one, you need to know the differences between them. First of all, the fees for each Bitcoin ETF are different, and right now they're fairly competitive, but they're expected to get even more competitive as time goes on. 4 of these spot Bitcoin ETFs will start with 0 fees for the first 6 months and then increase their fees after that. And the fees vary widely, everywhere from a 0.2% fee for Bitwise, ticker BITB, all the way up to a 1.5% fee for the Grayscale Bitcoin Trust, ticker GBTC. So when you decide which one of these to actually buy, you need to pay very close attention to the fees, because the higher the fees, the lower your profits. So you want to pick one with very low fees, such as BITB or the ARK Invest one, ARKB. The other thing to keep in mind is that these spot Bitcoin ETFs will not match the price of Bitcoin exactly 1 for 1. Even though these spot Bitcoin ETFs will try to match the price of Bitcoin, it's never going to be exact. They will always trade at slightly less or slightly higher than the actual price of Bitcoin. And this is going to lead to a little bit of arbitrage, where when the price gets a little bit below the price of Bitcoin, then more people will end up buying that ETF, which means some ETFs might go up a little bit higher percentage than other ETFs, just depending upon the day. The other thing to keep in mind is the higher the fees, the more that those fees are going to be taken out and given to the management team. And that's going to lower the amount that that spot Bitcoin ETF will actually rise. The spot Bitcoin ETFs with the lowest fees will rise more and more closely match the price of Bitcoin, while the spot Bitcoin ETFs with higher fees are going to lag behind the price of Bitcoin a little bit. The other thing you need to understand is how much money these ETFs will attract. The more investors who buy into these spot Bitcoin ETFs, the more the managers of those Bitcoin ETFs are going to have to buy Bitcoin, which in turn is going to push the price of Bitcoin higher. So the more money that people invest into the spot Bitcoin ETFs, the higher the price of Bitcoin ETF will go. And that is going to significantly affect your favorite crypto stocks. The first type of crypto stock this is going to affect are the exchanges such as Coinbase. Coinbase might be threatened by the Bitcoin ETFs. The reason exchanges such as Coinbase might be threatened by these Spot Bitcoin ETFs is because investors might decide to buy the Spot Bitcoin ETFs instead of Bitcoin itself, since you're still getting all the price action of Bitcoin without actually having to go through a crypto exchange to buy Bitcoin. And as a result of this, it could cause less and less people to use exchanges such as Coinbase, which in turn could cause Coinbase to lose money. On the other hand, as the people buy more and more of these Spot Bitcoin ETFs, and this pushes the price of Bitcoin higher and higher, it could also bring new investors into Bitcoin, which in turn might actually cause more people to use crypto exchanges such as Coinbase, causing the price of that stock to go higher. So when it comes to exchanges such as Coinbase, it's a little bit of a toss-up. There are some things that could be bad for it, and there are some things that could be good for it. Where stocks such as Coinbase go in the future, it's really hard to say. What is more certain, however, is how this is going to affect stocks such as Mara and Riot, mainly the crypto mining stocks. Crypto miners are expected to benefit hugely from this because as more and more people buy Spot Bitcoin ETFs, this is going to push the price of Bitcoin up, which in turn is going to significantly increase the profits of the Bitcoin miners. So no matter whether people buy Bitcoin itself or if people buy the Spot Bitcoin ETFs, which in turn will cause the price of Bitcoin to go up, either way, the Bitcoin miners are going to benefit from this, and the price of the Bitcoin mining stocks is expected to continue to go up. Of course, we also have the Bitcoin halving, which is expected to take place in April, which would also cause the price of Bitcoin to rise, which in turn would also cause the price of Bitcoin miners to rise as well. And the final thing to consider is how this might affect other cryptocurrencies besides Bitcoin. Right after the Spot Bitcoin ETFs were approved, Bitcoin actually fell while Ethereum rallied. Now that Spot Bitcoin ETFs have been approved by the SEC, there's a lot of hope or hype that Ethereum's Spot ETFs might be approved next. And if a Spot Ethereum ETF gets approved, or many Spot Ethereum ETFs get approved, this could cause the price of Ethereum to rise as well. Just like over the past couple of months, we've seen the price of Bitcoin rally over hopes that Spot Bitcoin ETFs could get approved. We might see the spot price of Ethereum rally over hopes that Ethereum ETFs might get approved. So while the run-up in Bitcoin has possibly come near an end and Bitcoin might start trading a little bit of flat now outside of the initial rally from just people buying Spot Bitcoin ETFs, the rally in other ETFs such as Ethereum might just be getting started. And if you would like to get $25 in free crypto as well as some free stocks, you can start trading crypto and Bitcoin and Ethereum as well as these new Spot Bitcoin ETFs yourself. Make sure you check out my deals on my platforms page, where when you use my links to sign up, you will get free stocks and free crypto. You can check that out at weprofit.io/platforms. That's weprofit.io/platforms.